You hear it from many a player, maybe a CEO, an executive saying, we bring on regulation, we want to therefore be deemed sort of more legitimate. But are investors seeing it that way?
I think you have to break down what kind of investors. First of all, 60% of those who were surveyed by Bloomberg, this is more than 560 investors, said yes. And interestingly enough, if you look at the type of investors, retail investors were saying so at a greater rate than professional investors. And when you look at the crypto industry at large, you are seeing a lot of divergence still in the types of investors that are more likely to buy crypto over the next 12 months off of the back of that. For example, you're seeing more sell-side traders say yes, as opposed to those high-level asset allocators and executives saying yes. So you do have divergence within the type of investor, but generally
whether it's on their own personal book or whether it's for their investor.
Exactly. I think there's a huge difference there on the volumes you're buying at that level, right? But 60% do say yes, that the regulatory clarity means a lot. Interestingly enough, some of these investigations, as we know, are pretty nascent, and the things that the SEC are looking at, whether it's at NFTs and Yuga Labs, or whether we're thinking about the way they're approaching Three Arrows Capital, which is a little further down the road in terms of the hiccups we saw a lot earlier this year that were much more blatant and detrimental to the market, that a little bit of regulation might have protected some people against.
You, of course, mentioned, well, Three Arrows Capital was you were very experienced in the space if perhaps you were going into that area, or indeed if you're buying NFTs. It's a different type of asset class, perhaps, than Bitcoin, the OG. So how are people feeling about just that as an area to be going into at the moment?
One interesting about Bitcoin in particular is I think the difference that these investors have felt about the trading range. So when they were asked in the summertime, they thought that Bitcoin, by and large, most investors had thought that Bitcoin would crash down to $10,000. Now, generally, investors are feeling that there's a range-bound view here between 17,000 and 25,000 until the end of this year, which is a little bit brighter than the summer, but still range-bound. I think that there's a lack of consensus here about how much correlation there is also to other assets. I think that's very important, because we do see some professional actors seeing that correlation break down, but 42% of respondents think that the correlation to tech stocks will stay similar. So you see that interest rate worry still exist among investors.
So much for diversify, quite yet. Interesting, I just want to diversify the conversation a little bit, because I'm a Brit sat here looking at the political extraordinary occurrences happening over in the UK. And I remember, Rishi Sunak, now Prime Minister, was at one point talking about making the UK a crypto hub, making sure that their regulation was ready for this space. What did that news have for many a crypto investor today?
Well, obviously, the crypto meme traders are blowing up about it. There's a lot of great videos about Rishi Sunak on Twitter right now. But remember, it was only April when he said that he wanted to make the UK a crypto hub. He really wanted to put more framework around stablecoins being recognized as a valid form of payment. One quick thing I would say about this, too, is if you look at the actions that have been taken outside of that, take CBDCs, central bank digital currencies, for example. The UK is still only one of 46 countries that are still in research phase. Okay. There are 26 countries in development. There's 15 in pilot programs. So if you look at the CBDC world, when it comes to how fast the UK is moving, it is less fast than, for example, Australia, but about the same as the United States. But he is a crypto-friendly executive.